Good day. I'm Martin Gagel with Market Radius Research. It's Tuesday, March the 14th, and we've got Mr. Farhad Abasov, chairperson of Millennial Potash, joining us today. Millennial is almost like a new issuer or a new project with a recent name change, new management, and focus on a new project, the Banio Potash Project in Gabon. It looks like a solid team that's had great success in prior potash endeavors, and the Banio Potash Project has a lot of very attractive characteristics that seem to make a whole lot of sense. But please remember, this is neither a recommendation nor investment advice. We're here to learn about the company. Farhad, thank you very much for taking the time to join us. And please tell us about Millennial Potash.
Thank you, Martin. Thank you. It's a pleasure to be here. So look, I'll start with the presentation, guys. And again, look forward to your questions going forward. But we started with Millennial Potash recently. We resumed trading after the announcement of Venden about a month ago. And the project is very robust. I'll talk about it, but I'll start with this slide that kind of encapsulates all the major advantages of this project and why we actually decided to take on this project. Look, first of all, we are going to earn up to 100% of this project, which is very important for us as a management team. We always want to have at least 90% of the project, especially if it is in the public domain. The project has been explored in the past, so we know exactly what has been found, what kind of potash seams and horizons have been intersected. We have both carnallite and sylvinite horizons here. And again, I'll delve into more detail in the presentation. So we think there is significant upside potential as we're going to start exploration and development program. It is in a country called Gabon. It's on the western coast of Africa, one of the well-developed, most stable countries on the continent. The project itself is very well located on the coast. We have good infrastructure on site. The previous camp is still there. We have even drill rigs still on site, and drill cores are intact and available to us. That's also important, obviously. The team has done quite a few successful projects in the past, including 2 potash projects. One in Africa and East Africa, and the other one in North America. So it's basically the same team coming back again, and I'll talk about the team members momentarily. And the potash sector, that's another important piece of the puzzle. We always look at the supply-demand dynamic in the sector for the next 3 to 5 years before getting involved with a particular project. So here we think the dynamic is going to be very positive, very healthy in the next 3 to 5 years. And we'll put together very aggressive timelines, very aggressive development plan that should see the completion of a PEA, or a preliminary economic assessment, by the end of the year. Again, I'll walk you through the elements of the timelines of the development plan later on in the presentation. So a little bit about the team. So we have been involved with a number of successful M&As, but also obviously successful development projects. The last project was also called Millennial. It was Millennial Lithium, with a lithium brine project in Argentina. We took it from early stage all the way to the completion of the feasibility study, secured mining license, and then we ended up having a bidding war for the company in early 2022. Ganfeng, CATL out of China, as well as Lithium Americas, were all bidding. Lithium Americas outbid them, and they ended up buying the project. Initially, it was about $30 million market cap when I got involved with the project, and we ended up selling for $490 million. And as far as potash is concerned, we've been involved with 2 large potash projects in the past. One was Millennial Potash in Ethiopia. It was eventually sold to an Israeli company called Israel Chemicals. And again, we took it from early stage all the way to the completion of the feasibility study, and we secured mining permits, and then we transacted with Israeli Chemicals. Previously, there was a potash project in Saskatchewan called Potash One, the same exact idea, the same exact model. So that is the model that we're going to employ here as well. What we call dual track development, making sure that we can actually take the project all the way to production on our own, but at the same time proving up a large resource and attaching very strong economics to the project so that we can get traction potentially down the road with a potential acquisitor. So the team itself is heavily potash oriented. As you can see, we have Jason Wilkinson, who's our Chief Executive Officer. He was the Chief Operating Officer of Millennial Potash. He built the entire camp and all the operations from ground up in Ethiopia. Rick Lacroix, who joined us recently, is our director, but he's going to be involved hands-on as well. Now, Rick used to be the senior vice president of operations at Potash Corp, which is known as Nutrien today, and it was also director at Canpotex. Canpotex is an overseas marketing arm of Canadian potash producers. So he brings knowledge from both ends, from the operational side as well as marketing side. We're going to add more potash experience to the team as we go forward. So a few words about what's happening in the potash sector. I mean, probably some people already know, but others may not be up to speed on what has been happening and how the war in Ukraine, the Russian invasion of Ukraine actually has affected the sector. As a result of that, tectonic shift, I would say, in Europe, the European Union and as well as the United States have imposed sweeping sanctions on many industries in Russia and Belarus. Now, Belarusian potash sector has been singled out by the EU because it's a major, hard cash earner for Belarus. And so they've sanctioned all of that potash. So all of it is stuck either in their storage facilities in Belarus or at Russian ports. So almost none of it is coming to the market. We're talking about 10, potential 11 million tons of potash not hitting the markets. Now, if you look at these pie charts, you will see that almost 35% of world supply comes out of Russia and Belarus. And as I said, almost all of Belarusian potash is stuck, and some of Russian supply is constrained as well. Okay, so that basically, I would say this situation serves as the floor for the potash price going forward. We don't obviously know when the war is going to be over and when those sanctions will be lifted, but for the time being, the situation has taken out probably about 10, maybe 15 million tons out of the market. Let me tell you about Gabon. So Gabon is a new jurisdiction for us. We're quite familiar with East Africa. This was the first time going to this country, so we had to do quite a bit of due diligence before we decided that we will be able to take this project on. And it turns out that Gabon is one of the best jurisdictions in Africa, not only in West Africa, but on the entire continent, primarily because it is probably one of the most stable countries there, thanks to its oil and gas reserves and smaller population. So they've been very successful in attracting foreign direct investment into oil and gas sector in the last couple of decades. Large operators are already there out of Europe, Shell, Total. They've been operating in the country for quite a while. And what they did a few years back was interesting. They decided to basically diversify away from oil and gas sector and to try to attract investments into mining. So they revised their mining laws about 4 years ago, and they made it a lot more defined, or clearly defined, I should say, in terms of the government's participation in the project, in terms of corporate taxes and so forth. So that has actually resulted in bringing new, fresh capital from mining sector into the country. So Eramet is there, Fortescue is in Gabon as well, and there are a lot of other small juniors and mid-sized companies that are trying to enter Gabon as well. When we announced that we're coming into Gabon, this was really warmly welcomed in the country. So as you can see from this slide, they also decided to join the British Commonwealth last year, which was a very unusual move on their part, because it is a francophone country, but they basically decided to signal to the world, specifically to English-speaking countries, that they're open to business not only from France, but from other countries as well and other parts of the world. So that has worked quite well. Now, I want to note here is that they've been targeting not only Western capital. In other words, they've been trying to attract not only Western capital, but also Asian capital. So the Chinese companies are welcome in Gabon as well. So they've done pretty good job balancing, the both geopolitical and economic interests from different parts of the world. So the project itself is interesting that, it has been explored twice in the past. You can see some of these photos from the existing side. As we speak, the team is on the ground. Jason is on the ground. He's been actually sending me photos of the site and what is being done as we speak, in order to mobilize and start drilling the next few weeks. I'll show you a few more photos here. These are pictures taken from the previous explorer. It was an Australian junior company. You can see the drill core. Now, all of the drill cores from the last drill campaign, which took place in 2017, 2018, are still available. They're intact, they're on site. So we'll send them for to get them reanalyzed. But I just want to draw your attention to this picture on the left. You'll see that, you know, the red parts and the core, that is actual potash. So it is very healthy potash there. You can actually see it even visually. And I'll show you, of course, on stratigraphic columns as well, you know, in terms of thickness and grade and so forth. So let me just walk you through past exploration. I think this is very important for you to understand, you know, what the previous exploration campaigns have found here, what they have identified, and why we think the potential here is tremendous. So I'll just draw your attention to that inset map where it says, you know, Banio 1 through Banio 5. Those are drill holes, the red dots, and then to the north, BA001 through BA003. So the original or the historical drill holes were done in the 1970s by a French oil and gas company. So these are Banio 1 through Banio 5 in the southern tip of this project. And as you can see, the project is quite large. We're talking about 1,200 square kilometers. So what they've done, what the original drill holes of the hydrocarbon wells were sunk in the southern tip of the project. And they went down to about 1,200 meters, so it's quite deep. Obviously, they were looking for oil and gas. They didn't find any oil and gas, but they intersected a lot of potash. And I'll show you on a stratigraphic column on the following slide momentarily. Now, fast forward to 2017, 2018, an Australian junior company came here and they drilled 3 holes about 20 kilometers from the original cluster of hydrocarbon wells. And you can see them again on that inset map, BA001 through BA003. They didn't go that deep. They went down to about 500 meters, but they started intersecting potash at a shallow depth of about 230 meters. So let me show you here, and you will understand what I'm talking about. So if you, I'll look
Farhad,
at the,
sorry, on the back slide, it's a bit large property. I think you said 1,200 square kilometers. Is that what?
Yes, it's a very large property.
What is roughly the length of it from, I guess, sort of northwest to southeast? How long is that roughly?
It's almost 80 kilometers.
Okay, wow.
Yeah, it's a very large margin. So again, I mean, looking at this, we're gonna be focusing just in this area, guys, because you know, if we're gonna be drilling the whole place, the whole area, it's gonna take us years and years. So we want to focus really in this you know, area, which is about 20 kilometer length between these 2 clusters of drill holes. So just here, look at this historical hole right over here on the right hand side that says historical hole B02. And that was the original hydrocarbon well drilled by the French oil and gas company. As you can see, it went down to 1,200 meters. And all the green lines, green layers, those are potash layers. So those are potash horizons that they intersect. You can see they're very thick. They range between 15 all the way up to 30 meters each layer. So that's a lot. So if you take the total of them, total of all the potash deposits thickness, we're talking about 70 to 80 meters, which is incredible. Now, 20 kilometers away, we're talking about 3 other holes that have been drilled. Now, these were obviously recent drill holes. And again, as you can see, they didn't go that deep. They went down to about 580 meters.
And
but
these
they started
sorry, these are the holes done by the Australian mineral.
By the Australian company, exactly.
They were looking for the potash. They weren't looking for oil and gas, or? Exactly.
Okay. Their name was potash. They were focusing on potash, and that was the target. Absolutely, Mark. So that's why they thought that, you know, that's enough to go down to 580 meters. And I'll talk about our plans going forward as far as this area is concerned. But just to give you an idea as to what they've done, they basically did this three drill holes, and then they decided that they found enough potash just based on those 3 holes to put out a maiden JORC compliant resource estimate. Now, JORC, as you know, it's the Australian equivalent of our 43-101. So they put that out, and that was 1.7 billion tons at 16% KCl. So just based on these shallow holes, they put out a pretty massive you know, resource report in 2018, 2019. So that's what really drew our attention, guys. We looked at it and said, look, we see what the French oil and gas company intersected. We see what these guys put out. There's also 2D seismic that has been done here. So we have significant potash here. All we need to do is go back there, do a more thorough job in terms of exploration, drilling, reinterpret 2D seismic, and come up with a maiden resource. And I'll talk about it in a moment. I just want to emphasize a couple of things here. First, you can see that these potash intersection of potash layers that have been intersected in the shallow ones, they're actually much shallower or closer to surface than the ones that have been intersected in the historical hole. So there could be two explanations for this. Obviously, we'll know once we do the interpretation of 2D seismic and of course after drilling. Either this deposit actually dips as we go to the south, or the Aussies didn't drill all the way down, and potentially they could actually, if you go all the way down to 1,000 meters, the same seams, the same horizons will be intersected as well. So that would be something that we'll need to find out after we start drilling. But either way, it looks like there's a substantial potential here, especially if the whole area, I'm not talking about the entire 1,200 square kilometers, just this 20-kilometer area is actually continuous. Now, this was not surprising because there are quite a few projects in neighboring Republic of Congo, and they've already done quite a bit of work in terms of exploration and development. So we have good data, good geological data from those projects, and we think that this is just the same potash basin that extends into Gabon. Now, as you can see on the left-hand side here, we have grades and thicknesses, and you can also probably notice that we have two types of potash mineralizations. One is sylvinite, and the other one is carnallite. Now, sylvinite tends to have higher grade, higher KCl grade. As you can see, on average, we got over 30% KCl grade in sylvinite, and carnallite deposits usually lower grade. We're talking about between 16 and 20% KCl. Most of the potash that we have here is most likely going to be carnallite, as you can see from this. But at the same time, the very fact that it's thick carnallite seams and horizons, that will allow us to keep our potential operating costs low, and I'll explain why on the next slide.
Farhad, sorry,
yeah,
with the potash horizon thickness, can you just give us some, how do the thickness of these horizons compare with other substantial global projects? Is it kind of typical? Is it thicker? Is it thinner? Any context for that?
Yes, absolutely, Martin. So I can give you two examples of projects that we worked on specifically. The one in Ethiopia, we had actually three different potash horizons deposits: sylvinite, carnallite, and we had kainite as well. And they were very, very thin. We're talking about between 1 meter and 2 meters. And when I go into solution mining slide, I'll explain why that is important. But they were much thinner than what we find here on both sylvinite and carnallite. In Saskatchewan, we had sylvinite mostly, some carnallite, but mostly sylvinite, and they were probably on the lower side than this. They were probably overall, I would say, 10 to 20 meter thick versus 70 to 80 meters thick that we can find actually here. Not each horizon, but the total of horizons, so total thickness, so to speak. So I would say in that regard, it is probably one of the best projects out there. In terms of the grade, this is probably similar to any other carnallite or any other sylvinite project in terms of grade. Again, this is 30% sylvinite, very typical of sylvinite deposits, be it in Saskatchewan or elsewhere in the world. And the same can be said of carnallite. So between 16 and 20%, very similar to, let's say, carnallite deposits in Germany, for example.
Okay,
so
great.
that's how they would compare. So now, why this thickness is important? So that, the thick horizons will allow us to employ what we call solution mining technology, solution mining methodology. So basically what this is you drill into the ore body, you pump saline solution or saline water into the ore body, you dissolve it, then you pump the brine back up to the surface, then you evaporate water and you go through processing and you get to whatever potash product you want to produce at the end. Now, this is obviously not something new. Quite a few companies worldwide have been employing solution mining. Two major projects that have been using solution mining successfully are located in Saskatchewan. One is Belle Plaine, operated by Mosaic. The other one is actually a company that I was a co-founder of, Potash-1, that we sold it to a German company called K+S, Kaolin Salts. And they did put that project into production. And they started, I think, with about 1 million tons. And today, in fact, I met with them last week, and they've already reached 2.2 million tons of production out of that project, using solution mining. Now, why solution mining is so important, and why solution mining is something that we like, and frankly, all the previous projects of ours, not only potash projects, but even lithium and uranium projects, were all solution mining or in situ leach amenable. Well, there's several reasons. One, it allows you to keep your capex as low as possible because you don't have to move earth, you don't have to sink a shaft. So obviously, this is a much, kind of leaner operation, as you can imagine. For instance, if you go to visit Belle Plaine in Saskatchewan, you will never guess that a huge, potash mining is taking place there, because all you see on surface is, basically, the pipes sticking out with gauges on them, because of typical solution mining. Now, the other thing is it allows you to start and to operate in a modular fashion, meaning that you don't have to go big just to make sure that to kind of take advantage of economies of scale. Because of the lower capex, you can start on a smaller scale without losing out on the economies of scale. And the third thing that a lot of people don't appreciate how important that aspect is, or has become, especially now, is that it has a minimal environmental impact. So in other words, because again, you don't blast, you don't excavate, you don't move earth, you don't do anything to the ground, in terms of mining methodology. All you do is basically drill a hole, pretty narrow hole, 2 holes, so to speak, into one deposit, or into one cavern. Your environmental impact is minimal, which actually then lets you expedite your permitting process. Obviously, there are a lot less challenges during your permitting process as well. So that's a very important thing worldwide, no matter what country you're in right now. So that's exactly what we're going to be using. Now, to give you an example of how effective this may be in our case. So as I mentioned, Martin, earlier, it's 70 to 80 meters potentially the thickness of carnallite horizons in our potash project. So potentially we could have literally 5 to 7 caverns, large caverns of that size, operating for almost 2 decades without any need to build new caverns. So that is amazing. So imagine how much you will be able to control your operating costs if you need only a handful, half a dozen caverns, versus drilling 50 to 100 caverns, creating 50 to 100 caverns on an annual basis if you had thicknesses of only a couple of meters. So that is a big difference. So carnallite may have lower grade than sylvinite, but considering the thickness, you achieve actually pretty good operating costs as well.
Farhad, it is like the solution mining has lower capex than traditional mining. Is it fair to say that it has higher OPEX than traditional mining, or is it just depends on how big your caverns are and versus what kind of mining and so forth? Or is it just clearly that simple?
No, Martin, that's a very good point. They usually tend to be a little bit higher OPEX. Yeah. Because once let's say large operations by Potash Corp or by Nutrien in Saskatchewan, once they sank the shaft and everything else, and they start underground operation, their costs are probably around $50 to $60 per ton. Similar size solution mining operation in Saskatchewan will be probably closer to $70 to $90 per ton. So it will be on a higher end. Now here, we think it's definitely going to be under $100 per ton, because we've looked at some of the feasibility studies completed in the Republic of Congo, some of the projects there, very similar deposits. And some of them are reporting $65 to $70 per ton operating cost estimates. So we think, if we can achieve anything close to that, that will be amazing, considering the current potash prices, of course, or even the forecast potash prices. So, but generally speaking, yes, I would say that they tend to have a little bit of higher OPEX than underground operations.
And it's not very labor intensive. Is it essentially additional energy costs that drive the cost higher from pumping and maybe heating the water and that sort of thing?
Exactly, Martin. So basically what happens here, especially in places where you cannot use solar evaporation ponds. For example, we were in Ethiopia, and this brine would come up to the surface, would pump it to the surface, and because of very dry and hot environment year round and almost no rain, we could actually, and we did, put it in solar evaporation ponds, so the water evaporated like that, just like lithium brines in Argentina or Chile. And by the way, both Chileans and Argentinians also produce potash as a byproduct of that operation. So in Gabon, as well as in Saskatchewan, we cannot use solar evaporation ponds because of the climate. In Saskatchewan, obviously, you all know what kind of climate we have there, but in Gabon, it's all pretty humid, and half of the year it's a rainy season, so you can't really use that. So in both cases, you have to use what they call thermal evaporators. So you do use quite a bit of energy. We're fortunate here because Gabon is an oil and gas producer, so we'll have access to cheap gas, or cheaper gas, I should say. But that's what you will need to have access to a relatively inexpensive energy source so that you can evaporate it thermally. So these are large cauldrons, basically, you evaporate water, and then you go through processing. From there on, the processing is pretty similar, but but you need to get the water out of the brine first.
All right, thank you.
Yeah.
Good.
Sure. So let me go to this slide first, because it is important to emphasize the proximity to your end market. So just to give you again brief idea, I think I talked about the suppliers. On the demand side, the major importers of potash, I mean, first of all, the entire world obviously uses potash, all agricultural countries, but major importers of potash are Brazil, US, China, and India in that order. So Brazil imports about 12 to 13 million tons. US imports almost 10, 11 million. China almost the same. India a bit less, 4 to 5 million. But these four countries would be probably the biggest importers and of course consumers of potash. So as you can see, almost 75% of potash suppliers are located in the Northern Hemisphere. So Brazil will be closest to us or nearest to us once we're in production. So Brazil being the largest potash importing nation in the world, and will also be closer to China and India than almost all producers out of the Northern Hemisphere. Also, another thing that I want to, draw your attention to, although we don't have it here, we don't have an arrow pointing to the eastern United States, but the eastern states import a lot of potash from Europe. So as you can tell by looking at the map, so that may be another market for us, because we can actually, we will be equidistant to the United States, the eastern seaboard of the US, as let's say Germans or Russians or Belarusians down the road. So those are important factors here as well. And also bear in mind that Africa itself is a pretty substantial user of potash, 2 to 3 million tons a year, and they have no domestic potash production. So African nations actually import all of their potash. So if we are in production on our own, meaning that if we're in control of this project, when the project is in production, we'll most likely sell, in Brazil and Africa, it will make more sense. Now, also bear in mind that the pricing is quite different. For instance, in the US and Europe, you're going to get a much higher price, probably between $600 and $650 per ton today, versus $450 to $500 per ton in India and China. Brazil is probably somewhere in the middle. And African nations also pay top dollar because obviously, they buy in smaller quantities compared to larger countries, and they end up paying, higher price as well. So that's where we stand. Now, our timelines going forward. So as I mentioned earlier, we're really focusing now on mobilizing to get started with drilling. We have one drill rig from the past exploration on site. We'll start with that drill rig, but we've also signed a contract to get a larger drill rig, coring drill rig. Shortly, it is on the way to the site, probably will arrive sometime in April, and we'll be able to start drilling in May. That will allow us to drill the northern part of the project. So the shallow part, the drill holes that the Australian companies sank there in 2017, 2018, not the entire property. To drill the entire property will need years. So we don't want to do that. We really want to focus on the lowest hanging fruit first. So that will be the focus for the next few months. And then we'll get the maiden resource estimate out by the end of summer, again, based just on northern tip of that area. And then if it's large enough, and we are hoping that we'll be able to replicate the Australian JORC report, at least that, if not more, that will allow us to immediately launch a preliminary economic assessment. Now, as we're doing a PEA, we'll continue with expansion drilling, meaning that we'll come down to the south and start drilling the deep holes, because that's where we think the mother lode of potash is. And by the end of the year, we're hoping to complete a PEA. And in the first quarter of next year, put out an expanded or revised resource estimate, again, including probably this 20-kilometer radius. And then that will allow us hopefully to go straight into the feasibility study. So basically, we want to look at the results of PEA. If the results of PEA are pretty encouraging, are positive, then we'll probably skip a pre-feasibility study. We usually don't go into pre-feas unless we have some issues that we need to iron out, and then we go straight into a feasibility study. And while we're doing feasibility, obviously we'll start doing all the environmental work as well. As you know, it takes about 12 to 18 months to finish full studies. So we'll get going with EIA studies as soon as we can, probably early 2024. So it's a very, very aggressive, ambitious program. But again, we have people who know what they're doing. They've done this many, many times. The hardest part, frankly, is right now mobilizing, getting all the equipment on site, re-engaging all the folks that used to work there. I mean, the good thing is that we have a mining town called Mayumba, not too far from the project, about 45 kilometers away. So we basically re-engaging all the folks that worked there in 2017, 2018. We have a drilling company that knows the area quite well. So it's a matter of just putting all the elements together so that we can start drilling. Again, I think, relatively speaking, it's kind of a bit faster to mobilize because there are quite a few aspects or elements of the camp and infrastructure in place already, but still takes time. And it's good that we already located, as I mentioned, an appropriate drill rig that is being shipped down there, so we can actually get going with a full drill program in the next couple of months. So that's the story, guys, and I'll stop there. I'm sure you'll have some questions. Maybe I can just touch on this. I think this is obviously important for you to know where we stand with our cash position. We just closed a quick financing round at $3.5 million. Frankly, we were not planning to do that. We announced the deal we resumed trading about a month ago, and we started getting quite a bit of inbound demand. So we decided to do $2 million, and then the demand was much higher than that. So we upsized it to 3.5 and decided to kind of cut it off at that. So we got $5.5 million in the bank, which will allow us to actually execute on all these programs that I mentioned. As you can see, we also have warrants at 60 cents. So once they're exercised, that will bring in about $3.5 million as well. And the last round also had half a warrant at 75 cents, another $2.5 million. Now, in terms of financing in general, again, we'll play it by ear. We have enough cash now, but obviously if the markets get better, if there's demand, et cetera, and the stock is obviously at a higher level, we'll decide at that point what to do with financing. But at this time, we have a sufficient amount of cash to proceed with all the programs that I mentioned. And just to mention, the board and management own about 40% of the stock. So we've been funding this project so far mostly with our own cash, and we will continue obviously participating in future rounds of financing as well. So just to recap, guys, quickly, again, this has been previously explored, as you probably already gathered from that slide that I dwelled on for a while, that this has a significant potential, and we think that we'll be able to basically crystallize that potential in the next few months. It is in a good jurisdiction. It is located in a right place in Gabon as well. And we think that the potash sector dynamics are going to be pretty robust for the next 3 to 5 years that will allow us to develop this project. So that's the window we're looking at. So I'll stop there, guys. And if you have any questions, please go ahead.
All right, Farhad, can you go back to your, I guess, 2 slides to the timeline, the time scale plan? I guess in regards to the financing, I guess disclosure, I participated in the last financing, so I got skin in this game. Your with your balance sheet that you have right now, how many or part of this plan, you don't need to drill a ton of holes, as the Australians have shown. Punch in a few holes and you can get an estimate out of it. What is the plan on how many meters or how many drill holes are you in, let's say in 2023, do you plan on putting in the ground?
So that's a great question, Martin. So we, in the northern part of the project, again, when I said project, but that area that I showed you on the map, we're planning to sink between 3 and 5 holes.
Okay.
They will probably be deeper than 500 meters because we want to at least sink one hole down to about 1,000 meters to see whether the same horizons that were intersected in the south are also present in the north. And if they are, obviously the rest of the holes will go deep as well. And you're absolutely right. You hit the nail on the head that we don't need too many holes. Probably 3 to 5 holes, whether they're going to go down to 500 or 1,000 meters, will give us more than enough resource, we think, to kind of put out a maiden resource report by the end of summer. Overall, we'll probably drill probably close to 10 holes, including the southern part, because southern part will be critical for us. It will probably, at the initial stage of expansion drilling, will sink 3 holes in the south, and that will give us a pretty good indication of what we find or whether we can reconfirm what the French oil and gas company intersected in the 70s. So looking at the whole thing, this year probably the cash that we have will be sufficient for us to do the entire program, including the expansion program. And now going forward, if we decide to do even more drilling, we'll look at the situation. To be frank, with potash, once you hit 2-3 billion tons, that's more than sufficient. I mean, everything else on top, obviously it's impressive, but as far as your economics are concerned, that has a little bearing on it, so little impact. So that's why we think want to do expansion drilling to show the big potential, big resource in the south. But after that, really take it easy from there and really focus on the feasibility study and potentially do a pilot operation there as well.
All
that
right.
is next year, of course. Yeah.
Yeah. So roughly this year, it sounds like sort of 6 to 10 holes you expect to get done?
Yeah, I would say 6 to 10, exactly.
And do your balance sheet with the $5.5 million here, does that get you through that program and let's say to the end of this year, or how far does that your balance?
We think it will get us through the end of the initial drilling campaign and the PEA, and potentially get going with that. Well, cover at least half of the expansion drilling.
All right. All right. And I'm just curious, when you're drilling for pot, is it just standard like normal mining drilling that you do, or do you have?
Yes, it's a normal one. Yeah, so just you need to get the cores out.
Yeah.
But other than that, it's pretty straightforward.
Okay, just standard diamond drilling. All right. We have some questions. I've got some more questions as well, but let's hit some audience questions here first.
Should I open it, or
I'll read them out.
You're gonna read it out. Okay, perfect.
I'll read it out to you here. What chemical solution is used for this approach? Are they acids or alkali? What sort of thing? Or is it hot water?
So that's a great question. It is water, but it's not just regular water. We have to add salt to it, NaCl. In our case, we'll just be using seawater. So in that regard, we're really in a very good location because we're right on the coast. In many parts, including Saskatchewan, including our previous project in Ethiopia, obviously we were not on the coast. We didn't have access to seawater, so we had to add NaCl. We had to add salt to the water. And yes, you need to have warm water. So we'll need to warm it up a little bit. I think it'll, if my memory serves me right, to about 45 to 50 degrees, and then it's pumped into the ore body. But it's not, there's no acid in it or nothing. So it's really very benign. And that's what we like about it, because impact on not only, the surface, but also underground is minimal. You're not really changing a lot of things. And most of this water obviously comes back up to the surface. So, salinity in the ground doesn't change a lot either.
And do you get to recycle that water then, or you have to process it?
No, because it's seawater. So you're going to be obviously, evaporating water part, and the salt comes out as well, as part of your processing. So salt will be a byproduct. And, we'll pilot, I'm not sure at this point, Martin, whether we're going to be able to dump it back into the sea. Depends on the amount, depends on obviously what part of the see, or will be just stockpiling like they do in Saskatchewan, or burying in the ground. So that part we'll need to get answers to that, when we do EIA, of course.
Yeah, that's for further studies. Okay,
Yeah.
that makes sense. Why did the Aussies walk away from the project?
So the Aussies walked away because the potash price went down, and they couldn't raise capital. They run out of cash, and lithium took off. So they decided to reorient themselves towards lithium. So that's why they couldn't continue with the project. They really didn't have enough cash. In fact, that's how we ended up with this project, because the drilling company that did all the drilling for them in 2017, 2018 did not get paid. So the Australian company could not pay them because they obviously didn't have any cash. So they transferred the title to this UK-based drilling company. And the UK-based drilling company knew us from our Ethiopian days because they did all of our drilling there. So they approached us a few months back, presented this project to us, and we started doing due diligence at that time. So that's how we came across this project. But Aussies left it primarily because they ran out of cash.
Gotcha. So speaking of the project, you don't own it at this point. You have an option to acquire 100% of it. Could you give us a few details on how this option is structured?
Sure, Martin. All the details are in the public domain. We'll obviously put it in our news release. But just to give you kind of a brief rundown, so we own 25% of the project now. We'll earn up to 100%. All of the payments, both in cash and shares, are all milestone based. So the next payment and issuance of shares will happen on the back of a maiden resource estimate. And then the next one will be, that will earn us 51%. And then the next one will be on the back of a PEA that will earn us 70%. And then lastly, the feasibility study, and that will get us 100%.
All right. And so you've got to earn it by putting in the money. And then what is the value of the payments, or do they get equity in MLP as their compensation for this? How does
they will get equity. So overall, we'll pay them $4 million in cash. Again, this is over, all of this, by the way, is backloaded, meaning that most of it will come in at the feasibility study completion time. Yeah. And we'll issue them 6 million shares of MLP, and then we'll of course take on all of these programs ourselves. So our minimum expenditures are $12 million.
Is there any sort of NSR left remaining on it or anything like that?
No, we usually don't like NSR, so we convince them not to put NSR on this thing. So there's no NSR. We'll own it 100%.
Okay, that's excellent.
Yeah.
Can you expand a little more on the economics of your two former potash projects in the past in terms of their NPV and IRR? And do you think this project will have similar economics?
Yeah, of course. So look, it will be difficult to compare them apples to apples because they were different sizes, meaning the initial production size in Ethiopia was about 1 million tons. In Saskatchewan, again, we're shooting for 1 million tons as well. Here, we're going to go for 400,000 tons. At least that's our conceptual thinking, because we want to keep it kind of more manageable on the capex side. We can probably compare it somehow. I can give you some, indication of how they compare. So the Ethiopian project, size-wise, resource-wise, I think in the end is going to end up being smaller than this. Because we already see what Australians put out, and this is going to be larger than what the Ethiopian project was. But the NPV there was quite impressive. We're looking at almost $600-700 million, and we think depending again, but remember that one was about 1 million tons a year. The costs were higher there. Capex was much higher. We're looking at $750 million capex. Here, we're going to probably look at around $300 million capex. The OPEX there was higher, or about $120 per ton. Here, we're going to look at probably considerable less than $100 per ton. So that was the Ethiopian project. The one in Saskatchewan was also 1 million ton a year starter. But as I said, German company actually now is producing 2 million tons out of there. There also we're looking at much larger capex. We're looking at $1.5 billion. So it was a huge capex, very difficult for a junior company to actually execute on that. That's why it was a priority for us to sell it. And OPEX was about $100. It was, I think, $90 per ton, if my memory serves me right. And NPV there was quite large as well. So we're looking at close to $1 billion of NPV. Here again, I can't say anything about NPV because we haven't done any work. But if we were to compare these three projects, I think this Gabon project will compare very favorably for two reasons. That A, we can actually keep capex low because of the geology, because of the deposit thickness and so forth that I mentioned earlier. Hence, this is actually more, I would say, realistic project for a junior company to tackle. And the second thing is, it is in a jurisdiction that potentially can attract significant strategic interest because, as I said, Gabon is in a place that will attract both Western capital and Asian capital, specifically Chinese capital. And that's very important because, with Canadian project, for example, we're stuck only with companies or potential acquisitors from developed nations. So basically from North America and Europe. In Ethiopia, it was very tough as well because it was very, very difficult to attract Western capital, specifically on the M&A side. So that's why we attracted basically a Middle Eastern player out of Israel. Here, I think, the options are much, much wider. And that's another reason that we like this jurisdiction, because as you've seen from our track record, we eventually have M&A exit. So when we get involved with the project, we have that exit kind of view in mind. So we want to see what's going to happen with the project in the next 2 to 3 years. And I think this has both options, that in place, meaning this can be taken to production, or this can actually be exited through M&A. So I think, again, hopefully we'll come up with a very strong NPV by the end of the year, but I think this will be, well, I can help you with another thing. Like, we know that some companies in the ROC, in the Republic of Congo, very similar deposits, they came up with their economics, and their NPVs vary between $600 million all the way up to like $2 billion, depending on the size they want to start with. The ones that are hovering around $600 million, they're about 400, 500,000 ton a year operations. I hope this helped you, but just to give you a kind of a range.
I think that was excellent context for size, so that helped me a lot. Thanks. Your last two, or actually your last three projects, but your last two potash projects, they were all sold. I believe that was after the feasibility study was then. Is that when one would, that is essentially your primary plan, is that you hopefully expect to find a partner for this after the pre-feasibility study? Is that when the major de-risking happens and when people get most interested and you get sort of the biggest value creation?
Yeah, Martin, usually what happens is that once you have proven up the resource and then you attach a healthy economic study to it, at that point you can start engaging with potential parties, be it strategic investor or a strategic buyer or whoever it might be. And because at that point they know that major kind of aspects of the project have been already addressed. Of course, you still have some issues to go through. You have to do environmental, you have to maybe pilot operations. So those are feasibility study level. But at, I would say, post PEA level, you start engaging with different parties because it does take them time to do their due diligence, etc. But generally speaking, they don't pull the trigger until the feasibility study has been completed. Or at least, you're in the middle of the feasibility study and they have access to the data already. They can kind of do their evaluation at that point. So that's our plan. Again, what is unique about Gabon, I want to just mention this, that in a country like Gabon, you can get a very big debt package through organizations called development financing institutions. These are basically large Exim banks, development institutions worldwide. We have one in Canada, for example, Export Development Corporation of Canada out of Ottawa, International Finance Corporation out of Washington, D.C., half a dozen of such organizations in West Europe. There's African Development Bank And the reason I'm raising this is that for you to understand that you can get up to 60, maybe even 70% of your total CapEx requirements through this debt package provided by these institutions. You don't even have to tap into commercial banks. You just go for this. I mean, the reason I say that, I know this for firsthand because we did put together such a package for Atlanta Potash in Ethiopia. And out of $750 million, almost $600 million was actually coming through this type of a debt package. It's basically low interest rate. And these guys are very solid supporters because their mandate is specifically to help private enterprises in developing nations. So bear that in mind too, that in Gabon, you have an option to potential exit through M&A, but if the market conditions are right and you can put together a very healthy, very strong and highly leveraged debt package, you can actually take this to production with minimal dilution to your shareholders.
So, and I guess you're not gonna, let's say, get your feasibility study done, and if you haven't got sufficient bid, you're just gonna sit on the beach until someone makes you a good enough offer. You're gonna push ahead, presumably, given the right economic environment, with the project yourself, and you're gonna evaluate it as what's the best option to take for shareholders, you being one of the larger ones.
Exactly, Martin. Right after PEA, we're gonna engage not only, as I said, potential acquisitors, but with strategic investors. And by strategic investors, I mean both industrial players, but also those organizations, DFIs and Exim banks. Yeah. Because it does take them 6 to 8 months to do their due diligence, go through their committees and so forth. And but they will have materials, they will have data to chew on once we're done with PEA.
All right. Okay, on to another audience question here. Please give us an indication on the permitting situation in Gabon compared to more established jurisdictions.
Yeah, it's an excellent question. So currently we have an exploration license, a prospecting license. So it is for 3 years. It started ticking, I think it was in October last year. It was actually in the middle of the deal. We requested that the current owner actually extend their existing exploration license. So it gives us basically another 3 years, 2.5 years right now to do all the works that we're talking about. We can extend it again by another 3 years if necessary. Hopefully it won't be necessary. Hopefully in the next 2.5 years, we'll be applying for a mining permit. So the next step for us after the feasibility study, after the EIA is done, we will be in a position to apply for a mining permit. So the mining permit, again, is issued pretty much the same way as exploration permit, except for, of course, you go through, the motions, you have to submit the EIA, you have to show the feasibility study is done properly and so forth. And then once you get the mining permit issued by the government, it has to be approved by the parliament of the country. And then once that is done, basically you have it issued, and it is for 10 years and then extendable for as long as the mine is in operation.
All right. There's a sort of another question here relating to this. Will seawater injection and then dumping it back into the ocean require special environmental permits? And you commented on government's approval, but obviously this would require governmental approval, being allowed to do that.
So we don't, frankly, at this point know, Martin, whether we're gonna be dumping the the salt back into the sea or not, because obviously we'll have to do some work. We'll also have to look at, instead of reinventing the wheel, we'll look at what kind of EIA has been done in neighboring Congo, and that will tell us actually what is the most optimal way of disposing of salt that comes out of the brine. So if it requires special permit from the government, that will probably be part of the EIA, because that's exactly what we'll be putting in our environmental studies. What is going to happen to salt and so forth. So I don't have a definitive answer for this, but I assume, and I think that's a pretty solid assumption, I would say, that will be part of our environmental studies.
Yeah. All right. And final question here from the audience. Will MLP require geotechnical holes for the thermal evaporation ponds and any processing plants?
So we're not going to have any evaporation ponds here. So we will drill some geotechnical holes for sure, most likely as part of the pilot operation. So our plan, Martin, is that next year, as we start the feasibility study, is potentially also launch a small size, pilot operation. By pilot operation, I mean literally going down to creating a cavern, so that we can see how it works, at what rate the potash dissolves, at what rate we can pump it up back to the surface, and so forth and so on. So yes, we'll need to probably drill a few geotechnical holes, but that will probably come in, if not later this year, most likely, early next year.
All right. And I've got one final question. When you've got this huge land package, and when you're doing sort of preliminary exploration on it, can you do geophysics to sort of identify sort of probable zones, or do you use seismic, or what kinds of to sort of narrow the where to sort of punch holes on the property? What techniques do you use to increase your probabilities there?
Yeah, you can use both, and the previous companies have actually done, well, the Australian company has done a 2D seismic work here. So we have access to that data, and we will be reinterpreting as well. So, I mean, the best would be to do a 3D seismic, but I'm not sure whether we're going to actually go ahead with 3D seismic. I think between 2D seismic work and the drill holes that we're going to be sinking there shortly, we'll have very good understanding of the deposit. But overall, I think going forward, let's say, we kind of got a good grip on this area, we'll need to look at what else is out there. And at that point, we'll probably fly some, we'll do some geophysical work over the rest of the area, just to see whether we need to keep them as well, because they're prospective, or we'll relinquish it at some point, because as you saw, it's a real large area. And the government doesn't require that you kind of say, look, this is the area I want to focus on, and I need to relinquish the rest. So that's a good thing. So we can keep the whole thing if we want to.
Are there substantial holding costs on the land?
No, not at all. They're minimal.
Okay.
Like a few $1,000s a year.
Okay. And I think we've covered everything. That was great. Any final comments from you as we wrap it up? And I guess just the market has short attention span. You're going into drilling, and then resource estimates are your next sort of milestones. What kind of short-term news flow should investors be looking out for, and being sort of to be kept up to date on the happenings at Millennial?
So look, Martin, a few things. First, obviously, we'll put an update on the timelines and the mobilization and so forth shortly, but also we'll start putting out, drill results, but also the reinterpretation of the previous drill course. Remember, what I've told you was actually done by an Australian company, so we need to go back, and we are sending actually those drill cores back to labs in Spain and South Africa for further analysis. So those results will come back, and those will be formal results, so to speak. Hopefully 43-101 compliant as well. And also the results coming back from 2D seismic. So those will be, I think, in addition to drill hole results that will be, executed in the next little while. So I think starting in the next few weeks, we'll have, that type of news flow coming out.
Okay, so we've got some decent news flow coming out over the next months and quarters.
For sure.
Okay, that's great. Farhad, thank you very much. That was excellent overview and dive into your project there in Gabon. Thank you very much.
Thanks so much, Martin. Thanks, everyone.